Hello everyone, hope you guys had a wonderful 4th of July. In today's video, we're going to take a look at the S&P 500, the NASDAQ, the IWM, the Russell 2000, the dollar, and the bonds. All right, so without further ado, let's get started with the video. All right, so first and foremost, I want to take a look at this chart here. So this is basically explaining That was very close. I almost continued speaking. It didn't work. All right. So anyway, this chart basically shows what happens during midsummer when the previous quarter was positive. All right. So in 2023, we can see that between March 19th to June 19th, the S&P 500 was up 12.5%. Between June 19th to June 27th, the S&P was negative, right? It was down around 1.8%. This number here should be around 1.8% down. Now, since June 27th, the S&P 500 is up around 3% already. So what this chart is basically showing is that between June 27th to July 23rd, the S&P 500 has a bullish move. It's bullish during this time period. And we are already up 3% during this time period. All right, so I just want to simply show you guys that according to this chart, moving forward, for this month, according to this chart, we are going to be green. All right. Next, right off the bat, heading into the first day after July 4th, we have FOMC minutes coming out at 2 p.m. tomorrow on Wednesday, right? And then we have OPEC meeting as well. Thursday morning, we have important news coming out at 8:15 and 8:30 a.m. Then we have important news coming out at 10 a.m., which is intraday at ISM services and JOLTS job openings. Then Friday morning, we have more news coming out pre-market. So Thursday is the only real day that we're going to get news coming in during the morning time here at 10 a.m. And aside from that, Wednesday, 2 p.m. is obviously going to also be very, very dramatic and a lot of moves. It should be very, very volatile. All right, so what I first want to take a look at is the daily chart of Apple. All right, so Apple was extremely bullish heading into the other day, right? We opened outside of the upper level of the Bollinger Band. Now, I want to look in history together what happens the next days when Apple shows this much strength to the upside. All right, so simply, my thesis is that basically, according to history, whenever Apple opens outside of the upper level of the Bollinger Band like this, and the Bollinger Band is very, very overextended. So both levels of the Bollinger Band, the upper band and the lower band, show extreme overextension to the upside or the downside. Okay, so when we are opening outside of the upper level, there's a high probability that we will continue falling lower inside. And same concept, if we open outside of the lower level, there's a high probability chance that we bounce. Okay, so very simply, let's just take a look at what happens to Apple when we open outside of the upper level for the next few days afterward. So basically, we opened here. We had multiple days where we fell afterward. Okay, so you could see that we opened. A few days afterward, we continued falling. All right, let's continue looking back. Basically, at any point in these highs here, right, you can see that whenever we open, we get a continued move to the downside. So we opened over here, we got continued move to the downside, a multi-day drop over here. We opened here outside of the upper level. The next day was also red. We opened outside over here. We ended up falling lower as well. We ended up opening outside of the upper level over here. We ended up falling lower as well. So there's multiple different instances in time where this has basically happened. Obviously, the original April 2021, the market was just pumping, right? But what I wanted to show is what ends up happening when we are at. So this is probably the only instance that is going to be relevant right now, right? We opened, right? But then we continued falling lower the next day. So that is at least what I think is going to end up happening. At every other point when we opened outside the upper level, we continued falling lower. We continued falling lower, right? And the point is that it happened for at least one more day. So now when we come back, that is basically telling us that Apple should have another red day tomorrow, according to statistics, according to what we just looked at. So with that being said, it all basically depends on whether Apple can help push the market down even further. But it is definitely going to be a play to essentially play Apple to the short side heading into tomorrow, according to statistics, because we opened outside of the upper bands Monday. All right. So the next thing that I want to take a look at is basically what happens with the SPX when Apple is like this as well. So because that's more relevant to us. So essentially, you can see there's a few things that end up happening. So obviously, the main trajectory is Apple also continues falling lower as the S&P 500 also continues falling lower as Apple falls lower. So over here, you can see the orange line here is the S&P 500. We continue falling lower as Apple is very overextended to the upside. Over here, it's interesting because the S&P 500 increases just a little bit, but as Apple continued to drop, this upward move right here in the SPX was a bull trap, and Apple continued to vomit, and that pulled the S&P 500 down as well. Continuing on here, basically we can see that a similar situation happened here where Apple was actually being held up. Apple didn't fall, right? But the S&P 500 fell much more dramatically before Apple did. So you can see the S&P 500 fell like this while Apple was still consolidating at resistance. And once we got a big monster move to the downside on the S&P, that's when Apple started to follow. Similar to what happened over here, we got a monster move to the downside in Apple, and then that's when the S&P 500 followed as well. So essentially, right, obviously the S&P 500 gets affected negatively as well when Apple is falling. So any bullish move that we see out of the S&P 500 is going to most likely be a bull trap. And it's going to be a bull trap, especially when Apple is showing weakness. So if Apple is showing weakness and the S&P 500 is showing strength, it's not a good time to go long on the S&P 500 because Apple can easily just vomit to the downside. And over here, we can see that if Apple vomits to the downside, then any bullish move that we see out of the S&P is fake. So during this time, it's safer to just not try to go long into momentum. You would rather go long in weakness because we already had a big move to the upside. Since, we just looked at that chart, since June 27th, we already had a big move to the upside. Now, right, since we have to have a bullish bias, we need to just wait to buy at dips. So until we get those dips, we should not be going long into strength. So once again, this is obviously a very, very bullish move, right? On Apple. This is obviously a very, very bullish move, but it is not a reason to basically, you can't be going long with momentum. Okay, you have to go long at support and you have to short at resistance. Very, very simply, especially during this time here, especially when a big move already happened. For example, had you gone long Tesla when it exploded to the upside back on Tuesday a few weeks ago, right? We exploded. We had like a huge move. We broke above the range, made a huge move, green candle. Everyone decided to go long. I was saying that was not the time to go long. It's actually very, very bearish that we did that. And the next day, it caught everyone off guard and Tesla it dropped like 20 points. And then it continued falling lower the next few days. So that is sort of a similar situation of what it's not necessarily going to be as dramatic, right? But this is not an opportunity, in my opinion, to start going long, hugely, hugely long Apple. Similar to why you shouldn't have gone long Tesla like that. And because Apple is this overextended to the upside, we have to just basically wait to buy dips. And it's not a good time to be very, very bullish. Hope that makes sense so far. All right, so first of all, let's go ahead and take a look at the dollar. So the dollar is relevant because it has an inverse relationship to the market. So if the dollar is doing well, that means that the stock market should not be doing well, should be falling. All right, so we can see that the dollar is in an uptrend. This is not the most bullish setup on a security, right? Generally, when we see something like this and it's bouncing off of its uptrend levels, right? But it doesn't give any big green candles. That's not really what we want to see, because ideally what this candle should have been, and basically what should have happened is we should have had a big move to the upside already, but a small stagnated staircase is not what we really want to see. But technically, we're holding above levels of support. We're creating a bit of a base above these levels of support. But what we really need to see is a big move to the upside on the dollar. And then that would translate into a move to the downside on the SPY and the overall market. So far, not the most bullish setup on the dollar, but we have the rest of the day to see where the dollar ends up going. We need to see a big move to the upside in today's candle on the dollar here. So next, I want to take a look at the bonds. So the bonds have a more correlated relationship to the market. So if the bonds are doing poorly, that means that the overall market is also going to be doing poorly. And this is obviously not a bullish setup either. This is a bear flag. So bear flags tend to break to the downside even further. And that would lead to a new low on the bonds. But this is not a bullish setup. What we need to see on the bonds is extreme strength. So it's not always that clean of a relationship between the bonds and the overall stock market. But we need to see a big move to the upside on the bonds. And then once we get a big move on the bonds, that strength can translate into the overall stock market. But currently, this is definitely not a very bullish setup on the bonds. All right. So now, plain and simple, this is the chart of the S&P 500. Clearly, you can see that things seem to just be levitating up in the air. And a setup like this, clearly, right, it doesn't look like it's going to fall, right? There's no reason for you to think that, oh my God, wow, this is super, super bearish. This is clearly, they're trying to paint a very bullish picture, right? But at these points in time is not the time to start going long. We are at levels of resistance. We are stagnating. We're staircasing up. We just gapped up. This is not a reason to go long. Even if we do continue skyrocketing to 444, 446, 445 or 446, it's not a reason to start going long here. The risk reward to the upside is not that high. The fact that the dollar is still showing strength, the fact that Apple is overextended to the upside, and basically the fact that the SPY is also just levitating up in the air like this, all of those reasons combined are not reasons to immediately be bullish, right? You'd rather wait for pullbacks, buy dips on those pullbacks for a continued bullish July, all right? And that is my thought process there. Taking a look at the NASDAQ, clearly not as strong as the rest of the market. We're much lower than where we are compared to where we are on the SPY. So this is not showing that much strength. And then very simply, we can take a look at the IWM. It was the biggest winner. And the IWM wicked up here like this. This is not a very bullish setup here on the IWM either. Generally, stuff like this ends up moving lower. And what's going to be interesting now is what's most likely going to end up happening is if Apple continues falling lower and the SPY takes a hit because of the NASDAQ, then the IWM is going to be the biggest winner, because money is going to flow out of tech and out of the S&P into the Russell and into economically sensitive stocks. So it's going to things like the XLF might get some love, and basically things might flow out of tech. All right. Next, I want to take a look at the seasonality chart of the S&P 500. This basically shows the last 20 years of the S&P and what ends up happening every year per month. And we can see that July is the best performing month in the S&P 500 over the past 20 years. and you can clearly see what happens during July. We just skyrocket up, and things just continue moving upwards, right? So what I want to look at now is a monthly chart on the S&P 500. And so far for the month, we're only up 0.12%. So according to Seasonality, right, the best case scenario now is if the S&P 500 ends up going red, we get a pullback, right? Because if we get a pullback, we're only up 0.12% for the month, right? If we get a pullback, we're going to be red for the month. And that goes against statistics. We should be green for the month of July. So anytime we become very, very red on the SPY is going to be a great opportunity to buy dips, in my opinion. And that is what I'm looking forward to. And just in general, though, it's not a good time to start going long here. In my opinion, there should be opportunities to get better prices down here at 437, 438. But regardless, right? According to Seasonality, we should be green for the month. We're currently up 0.12%. You can buy calls expiring in 2 months. Because if July is going to be green, we're only up 0.12%. If we're up even 0.5%, 0.6%, the calls that you would buy for 2 months out are going to be profitable by the end of the month. So there's a few different things that we can do to make money. And I'm excited to see what ends up happening. And yeah, I mean, with that being said, like, I think I covered everything. I hope you guys had a wonderful day. And I hope you guys had a wonderful 4th of July. I hope you guys have a wonderful day tomorrow. Please tune into the live stream. I'm going to be going live. And with that being said, please make sure to like, comment, subscribe, do all that good stuff. And I'll see you guys bright and early tomorrow morning. Thank you.